Hey everybody, it's Nicole Johnson with Covision Real Estate Group. This is part 2 to my video series about investing in mortgage notes. Video number 1 was just about what is a mortgage note. So this video today is about, okay, how does that get bought and sold? Like, what does that mean? So it's very similar to break it down in just like the basic terms that you might be familiar with is, say you bought a house and you got a loan through Wells Fargo. You had to borrow money from Wells Fargo in order to buy your house. So you buy it, you own the title, you own the deed to the house. That house is yours, but you have to agree to the terms of your mortgage between Wells Fargo to pay Wells Fargo back. So you are making your monthly payments with agreed upon terms to pay Wells Fargo back. So, but you get the title to the house. What Wells Fargo gets is they get the note and the mortgage to the property. So they own that piece of paper because it's recorded against the property. That piece of paper is actually an asset, just like the house is an asset to the buyer or the owner. That the paper or the mortgage is an asset to the lender because they are collecting and they are making money off of the interest and the terms of that mortgage that they've agreed upon and the promissory note in order for it to be paid back. So Wells Fargo's asset is the note, the house is the asset to the owner. And so just like the owner can sell the house at any time, the lender can actually sell that paper or the mortgage at any time because it's an asset. So Wells Fargo has every right to, they can't change the terms of the loan. First of all, that is recorded, that is set. They can't change any of those terms, but they can sell that document to another investor. So if you got a loan with Wells Fargo, it's probably really, really common that you bought a house, you got a loan, and a couple of months down the road, if not sooner, you got a letter in the mail that says, hey, congratulations, your loan has been sold to XYZ investing company. You now have to make your mortgage payment to XYZ investing company. That is called, your mortgage got sold on the secondary market and they sold that document to a new investor. That is what investing in mortgage notes means, is that it traded hands and now a different company is making money off of that interest and that recorded asset against the property. So Marcus and I have found ways to, we're obviously not a big banking company, but there are transactions like that that happen all over the country and opportunities like that where these mortgage notes are getting sold and we are able to find and have access to these mortgage notes, evaluate them, and purchase the ones that are good cash flowing opportunities. So that's the basics of what it means of that mortgage note getting sold. I hope that gives a little bit of clarity. Just remember it's, hey, congratulations, your loan has been sold. It's the same thing that we can do on a smaller scale here all across the country. We're able to find these mortgage notes and then help people purchase them and start cash flowing off of them instead of having to be this big giant bank doing that. It can happen on a small local scale as well. So if you have any questions, feel free to reach out. We would love to sit down and go out to lunch with you or go out to coffee and share our guide and talk more about mortgage notes. Or if you just want to stay curious, keep watching these videos. Thanks so much and have a great day.